Good morning, traders. Hopefully you can hear me loud and clear. YouTube give me a hard time this morning. Just unable to start the stream. So this has been going for about 5 minutes now. I recognize that, but there are some issues. Hopefully I'm coming through loud and clear and you can see the image very well. Broadcasting in 1920 or 1080 HD. Anyway, thanks for joining me. We're 10 minutes behind, 11 minutes behind. It is 8:11 a.m. from Chicago on Wednesday, the 23rd of January, 2019. Thanks for joining me. Bit of a struggle this morning. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Technology, baby. Technology. Today, the sentiment overall is slightly risk on. Looks like we are a little bit higher on the U.S. indices. The Europeans performed very well as well. We're still inside of yesterday's range in the NASDAQ and across the board, the S&P and so on. But the market's feeling a little bit better today than it did yesterday. So we'll see how this thing plays out. The Dow's up 197 points in the futures. The volatility index has dropped about 3%. The yen, the bonds, and gold are laggards. Those are your typical safety assets. The treasuries are down 11 ticks or 28 basis points in the futures. So this is where we stand. Yesterday was a selling day. Accelerated quite a bit once we broke through the 2626 yesterday, but which was scenario 2. Let's review that. On the calendar, however, what do we have today? We have Richmond Fed. The calendar is very light. There is a number coming out of the Eurozone consumer confidence flash for January. Actually, it will come out. It's coming out at 10 Eastern, 9 Central. The consensus is for negative 6.5. The previous is negative 6.2. Other than that, the calendar is pretty clear. There are comments coming out of Davos. Still, several countries have not decided to not go or whatever, but there's quite a bit that's pushing oil around. So pay attention to that if you have a news feed. If not, then why aren't you a part of Convergence so you can get one? So let's move on to our review segment. Yesterday, the primary expectation was for the market was opening in the lower distribution of Friday's range, and the expectation is that it would likely test lower into 2647 and then pop higher into the upper distribution for a test of the point of control. And that didn't happen at all. What did happen is an open auction, pretty noisy swings, tested up, and then a drop right through the prior day's low, a little chop. And then we continued down to 2635, and then I was looking for 2626 as the key target. 2626 has a little bit of confluence in it. That confluence is right here, right there, right there. And if you look way back, the last time we were here, there were several days of bottoms and tops in the 25 and a quarter to 26 and a quarter area. So I expected, as I said yesterday, I expect that there would likely be some sort of a bounce there. But the market kind of tiptoed its way down. Noisy chart here. Let me switch to a 4-tick Renko real quick, just so that we can see it all on one page. And you can see here we open, test up, test down, very clear. Opening swing, poke up. So push the opening swing high by 2 ticks to 56.50 and then start to extend lower. And you can see the retest of the open did not get breached here at 54 and a quarter on the dot. And next thing you know, we're testing the prior day's low by a couple of ticks. By a couple of ticks here, a move back to the mid. So this was the first spot. Move back to the mid causes an extension of about 10 points. And then we move our way back to the mid, which I was interested in again, except that on the first touch, I was interested, except that we were back into Friday's range and it was just waiting too long. And so I was warning the folks at Convergent that to be careful that it might break through the mid. The mid, generally, we want to see a push, pull, and then an extension into a mid, and then for it to move away fairly quickly. If it starts to flag at the mid, then it's likely to start moving up, and that's what I expected. So I laid off of that, which of course was not a wise choice, but hindsight's 2020, and then next thing you know, we are heading down through to 32.75, and then the next stop would have been 26 up here. So it pushes through 26 and then just consolidates quite a bit. You can see quite a bit of volume coming in right here. Consolidates quite a bit in between the 32 and 23 before it releases to the downside, and then we get this big extension up and it just becomes very noisy. Look at this profile yet again. We have a very serrated profile with a point of control that's very odd. The thing to recognize about yesterday is in the chaos, there is some semblance of order. If you look at last Thursday, you could see that we split the profile in this section and that section. So 26. And the next area down is 20. And then the next area up, where most of the bulk of the volume was, on this day was around the same as what we have at 26.35 is the point of control. There it is. See 26.35 point of control right there. And then look at yesterday's point of control, 26.35 and a quarter. So this area here is very much liked by both participants. There's quite a bit of, let's cut down on the noise here. There's quite a bit of trading that took place in that area. So let's kill that. Quite a bit of trading that took place right here. And then again, overlapping that right there. The market ended up pushing into and through the mid and VWAP into the close. This was partially driven by news back and forth that, we've got something with China, no we don't, blah, blah, blah. And so there's quite a bit of news that's pushing things around here. And we ended up closing pretty strong, right off of the lows, right against the point of control. We tested the point of control on the close, and in the last 15 minutes, we ended up selling off just a bit. But there's quite a bit of volume going off on the close. Let's look at that for a second. So as I scroll back here to yesterday's close, look at that. This is yesterday's close. A lot of range and a lot of volume. This is a point and figure chart. It's a quarter by 8 chart, 1 tick by 8 chart. And you could see that there's just absorption throughout this thing, but it really closed strong. The delta on this particular bar is very strong. It closed near the upper end, and you can see the participation by the very large lots was quite strong. Large lots, this is traders between 10 contracts and 99 contracts. Very large lots are 100 lots or more. And then the smaller lots, 271 net. So very, very strong buying, and then it was allowed to flag into the close, as you can see there. So that push up was fairly strong, in my opinion. So that's where we ended up yesterday. We ended up playing out scenario 2, but pushing a lot farther than expected. Again, yesterday 26.26 was the expected area. That's actually right here, 26.26. It pushed 10 points through. There's no way to predict where it's going to turn, and my goal is not to predict where it's going to turn. My goal is to have a plan for whatever it does, right? A scenario. From there, we open back up and we're sideways. We pull back a little bit on the European Open right here. And then since then, it's been pretty strong. The overnight profile is quite boxy, not really giving us a lot to work with here. Good volume, 219,000 and a week high. And the expectation is that we are likely to just continue higher. Most of the overnight inventory is long, and the delta is pretty much flat in the overnight session. So volume was pretty good, but it tested both sides, and it ended up trading the entire range without consensus, no consolidation, and it looks like it's not done to the upside. So that's that. I actually wanted to talk about the scenarios and randomness today. I've been talking a lot about randomness because it's something that folks don't recognize in trading, the effect of randomness. But I don't have the time given the YouTube issues. But let's move on to what we expect, what I'm expecting for today. Today, let's pull up. Today, it looks noisy, I know. Today, I'm looking for a pullback. Now we've done a really good job pushing up to 26.76 and have rolled over. To me, this looks like today looks like, given the way it finished and what we accomplished yesterday, the fact that we're holding this point of control where we are. An open auction in range, I'm expecting it to dip, and I'm looking for a push through the overnight high to challenge this 26.61 area. I'm expecting it to stall out and finish higher today. That would be scenario 1. I'm looking for a push into 26.61 and 26.66 as a key test scenario for today. The secondary scenario, now, if we don't get that, we have an open auction. I'm looking for a push through the overnight high and then an impulse down that brings us back into balance, test the prior day's close, and then start to move down. But I don't expect too much aggression on the short side just yet. Larry Kudlow's on TV today talking up the economy. The market's quite news driven, which is could be a fun trade, but also you get the technicals kind of get thrown out when you have news driving the markets. So this is what I'm looking at currently as the two key scenarios. I'm not expecting a runaway market or anything. The market was a little bit negative yesterday and is more positive today in terms of outlook. There's nothing on the calendar that's likely to drive us. And so these are my key expectations. I expect yesterday's strong close to continue, given the overnight tested lower and found buyers, and the overall market sentiment is relatively positive, slightly risk on. This morning, I expect a continuation of that. The market continues in a direction. It's like Newton's laws, in outer space. Things tend to move in the direction that they were moving in unless an opposing force is applied. The opposing force these days could be news. It could be whatever. I don't expect it to be earnings because those don't occur during the session. But earnings have been pretty good overall. And, technically fundamentally, that's what should drive a market. But but news has been the driver. You know, we're on our 34th day of a government shutdown, 33rd or 34th day. It's insane. So anything on that front could do it. Anything from with the China trade deal can do it. Brexit could do it. There's a lot of Brexit chatter this morning. It's just there's a lot out there that can impact the global economy. Good luck today, and sorry for the delays, but it's out of my control. Good luck. Take care.